Hello, everyone. Welcome to Next Big Future. And I have my good friend Randy Kirk with me. And we're going to talk about how Tesla has proven it's gone beyond just cars. The numbers that came out for the second quarter, particularly the energy numbers, more than doubling, increasing 132% from first quarter to second quarter, means that energy is undeniable. And I'm going to go over what that means for financial impact and also what this is just the first domino in going beyond energy uh, for the next 12, 24 months. The transformation will be shocking as Tesla goes to energy, robotics, the whole thing. So, welcome, Randy.
Yeah, so I think there's no doubt about it. We've seen a huge run up this last four business days or our market days. The run up was totally unexpected. Like I couldn't find a single person that predicted it, including me. And I was, that's sad. Anyway,
Hmm.
but the run up, I've been trying to explain it ever since. I've had people over on my channel trying to explain it. And in general, there seems to be kind of the thought that this might be the reason that people are finally going to have to accept that it is more than a car company, and that the fact that it's more than a car company makes it worth multiple times of what it's sitting at right now.
So let's go over the numbers in particular. So we know that we have um, the energy now is 9.4 gigawatts, but we know that I said most people ignored it. We had called it earlier, saying they wouldn't happen, getting to the 10 gigawatts per quarter, but that was under the assumption of a smooth ramp for Lathrop, which did not happen. That there were issues, blockages, not just on the production side, which were probably related to power chips, which is what Brad Ferguson said, but it also could have been because of difficulties for utilities installing. But the main point is we won't dig into that into too deep, but basically it looks like the blockages for the ramping of energy have gone away. And as I said, people did not model that. So I've done some modeling in that regard. But first, let me go over the summary of what we're going to talk about. So Tesla Beyond Cars, we're going to talk about the obvious as well as some of the hidden things. So these are things that Tesla bulls, the obvious things Tesla bulls have been talking about, which the mainstream has not accepted. So the reason it impacts stock price was that the main analysts, the big money, were kind of aware of it, but they would say, because they're smart, but they would give it 0% or 1% or something in terms of probability, or they would find other ways to downplay the impact. So they said, I'm just going to figure on cars because it's 90% of it, so then we're fine. So one, cars improved, and cars will continue to improve. So we know that the no growth story, fear, uncertainty, doubt about cars is going away. We had the better than expected delivery numbers, and that was 444K. And we have the 25K car of some form coming end of this year or be revealed end of this year and then delivering Q1 next year and getting to some form of scale next year. As
Yeah,
well
and
as,
I think I think there's a couple of other things too. I think that as the FSD becomes 100% capable, all of its skill sets like parking and reverse, as we get to what's known as it's 100% ready to go, that will sell more cars. When it gets to level 4, level 5, that will sell more cars.
mm,
So existing cars will sell significantly better once we get these kinds of things happening on FSD. Then you also have the Juniper. A lot of people, they've got that in the back of their head, but I've been talking about this now since the beginning of the year. I've been talking about the reality of not doing Juniper, I think, is the number one thing that has hurt sales this year. It has allowed the Model 3 to Osborne, the Model Y. And that effect is going to continue until that Juniper comes out. But once the Juniper comes out and has the same capabilities are maybe even better because it'll be a year later, maybe even better capabilities as the Model 3, Model Y sales. They're not going to be able to keep them in stock.
Yes. So I think that all these things will get us to a point where we're back to um, waiting lists for the vehicles. So we'll discuss that in a later slide. Tesla Energy, I'm going to dive really deep into that. And then FSD Robotaxi, the August 8th announcement, we're looking at the impact of 12.4.2, how many actual disengagements there are. My thinking is the critical level is about 2,000 miles per disengagement, basically over a month that you don't have to have a disengagement. And then the 4680 scaling, people kind of like forgotten about that. Is that even a thing? And I would argue that it is still a thing, and that when they do get it scaled, that drives Megapack, it drives cars because it reduces the cost and enables semi at a big scale. And semi is something that Tesla could totally dominate that entire semi market, which is 20 million to 30 million semi trucks, large trucks in the whole world. And you could replace them at 2 to 4 million per year.
Right.
So here's first on energy. So I modified this from Larry Goldberg. I'll show Larry's thing later. So the up to 2023, those are actual numbers. And we were having a lot of dollars per gigawatt hour, kilowatt hour. And then the actually per megawatt hour, but um, uh, in 2024 that dropped substantially. So an estimate from AJ, who does really good numbers, is 330. The price on the website is down to 900,000 to $1 million, down from 1.6 million. But it takes time for these things to flow through. So AJ who does really good numbers, suggests that it's about 5% drop every quarter, roughly. So I'm kind of going with that on these. It may not go that fast because there's delays in there. So we should have about $13.5 billion of revenue from it, assuming we get to 40 gigawatts for the full year. So we're already at roughly 14 because we had 9.4 plus the 4, so 13.4 gigawatts for the first half of the year. I'm thinking that the third and fourth quarter could very well be beyond the 9.4
Yeah.
for the second quarter up to like 12 or 13. One, there's power walls, possibly 3 gigawatt hours of power walls, and then two, the production capacity of Lathrop could have been lowballed to a certain extent as they got further operational improvements to it. And then cost of goods sold is about half the cost of it is the cost of goods sold. And then they have to put away some of the revenue for performance. They have to like operate for about a year, 2 years, delivering an operational performance before they get to unlock the full money.
Right.
And so then the gross profit, it should be about 26%. But this could grow as we scale up. So this can improve to 30%, even 35%. Again, with a detailed analysis from Larry Goldberg. Profit contribution, I have it about like 24%, kind of based upon what happened in Q2, based upon AJ's numbers, his estimate for what we got from the volume. It should be about 22%, but I think it improves in Q3 and Q4.
So let me understand that, Brian. Is that 24% of the total profit, gross profit for Tesla at that time? So just the automotive and the services, and then the other energy components. But you're saying the energy storage component would be about 24% of the total.
Yeah, we're ballparking about $3.8 billion of gross profit for the company, and then $800 million of that could be for the energy side. Fantastic. So it could be 24%, 26%. Anyway, it's not the precise percentage, but I'm just going to give a rough sense, and then it increases. So the valuation, I'm saying that if it's nearly doubling every year on the volume side, and doubling for a few years, going from 3.7 to $7 billion in profit, gross profit, to $13 billion in 2026, that you should have a pretty high PE multiple if it was a standalone business. So I think if it's doing $3.7 billion and having fast growth and good margins, $150 billion is a very conservative estimate for how much that energy thing is a standalone business. So that would be about, if right now we're at $750 billion, that is 20% of the
Oh,
company.
mhm.
And then, but this is, all these things are assuming just cars, energy only, no FSD and robotaxi.
Right.
And then the build rate of energies, doesn't go super duper crazy. There's a bunch of assumptions in here. I'm assuming that the mega factories can get more production beyond 40 gigawatt hours, like put more than 2 lines in there. I think you can squeeze in 4 on the footprint or with a reasonable expansion to it. So that would mean for 2024, we're at 150 to $300 billion, right? Is not unreasonable. And that would be a per share $45 up to $90 for what the contribution could be.
Right. Right.
Up from zero from before,
Right.
right? Because they've said all the stuff that happened before, yeah, it's $1 billion profit, maybe it was worth $10, but they wouldn't even say it's $10. They would say it'd be like zero,
Sure.
right? So the bigger number for Q2 means it's significant, and then they have to look at the growth, which then means a bigger number,
Right.
right?
Right.
And then if you're looking, forward 12 months or out a year or two, which is another way to look at a new growing line of business, then you can say, hey, it's very reasonable that they would have definitely the 2025 numbers where 2025, 2026, Shanghai and Lathrop will be fully ramped,
Right.
and could be beyond that. So then we get to those, $10 billion numbers of profit, which is about what we had last year for the whole company,
Yeah.
right?
Yeah.
And then we're looking at these $200 to $800 billion. The reason it's a wide range, one, because Tesla trades in wide range,
Right.
right? People can get, up and down on the moods. So I'm trying to hit into a relatively conservative, but, like getting us a flavor of what that means. And then by 2020, go ahead.
It'll be interesting too to find out what happens to the PE when you've got the very volatile automotive business as the base, so to speak. Then you've got this really solid utility as the customer, years and years in the planning where you can forecast so far out, very solid business, but growing like a crazy thing. And then you're going to put on top of that, you're going to put off a couple of SaaS businesses. It's going to be crazy to see how the street figures out how to value the company.
So basically, it's that we're putting in a firmer low end of the price.
Right.
So by the fact they can go really high,
right?
If energy in 2025 goes to like $100 contribution per share price,
right,
and then the auto business firms up to $200, then we have a $300 low,
right, yeah,
and then we could go up to 1,000, but the trading range shifts over,
right.
When you have multiple lines of business, if you're like a GE or something like that, then they don't always give you all the sum of the parts,
right?
Because it seems related to that they're not as it's confusing to them, and they like to offset risk with by saying I'm giving less for the energy because I want to give more for the I want to pad my car numbers or something like that. So having seen how they all think about the analysts think about this thing, where it's like up for the last 5 years, Gary Black has said, I give nothing to FSD, robotaxi, to Tesla bot because one's not here yet. He doesn't want to like calculate out Cybertruck or other things like that. He's just like, I'm just doing the main thing, and then we'll have that overall ASP and then get that number. And even people who follow fairly closely who own it, like Kevin Pathrat, Meet Kevin, he blew past the energy line when he was hearing the numbers. He's like, here's the press release. I'm kind of trying to read the production delivery right. Oh yeah, it's going up. Yeah. So then he backs into why is it going? Why did other people seeing? So then they justify it based on the price action. Yeah.
Without
So
even taking into consideration the energy component, which may have been by the second day and third day might have been one of the most important reasons why the stock continued up.
right. But the other thing is, so if we're to something we discussed before was like, what is all the reasons for it?
Yeah,
So part of it is energy business.
right.
But even though I say it's, $45 to $90 now contribution, I'm probably the only one making that analysis. Me and
Oh,
Larry Goldberg.
you and I.
Me, yeah, you, me, and Larry. Like a small community,
Right,
even
right.
within the Tesla community,
Yeah,
not everyone's making the analysis that
right.
here's what energy means in order to contribute.
Yeah. I don't remember what Dan Ives' contribution was, but I want to say it was well under $100 a share.
Right, right. I don't think he likes to do it more based on you know, China's doing great, China's not doing great.
Right.
He again does broad strokes. He's looking at a lot of companies, and then his is more a when he's communicating, it's all personalization. You know, is Elon the adult in the room?
Right. Exactly.
Is the Godfather Jensen Wong? He has the colorful stuff, right? But then he will move it. Okay, it can go up to 400 in the bull case. He's in the top 10% of the analysts, top 5% of the analysts, in terms of his high number, right?
Yes.
And then when he's getting beaten down, then he drags it down. He didn't want to drag it down, but okay, my people are freaking out. I got,
Gonna drag it
like people, I got to like drag my number down so they're not freaking out. And then as things perform, he can then, okay, yes, here's what's really going to happen. I'll move my number back up again, right?
Yeah,
Because he has to it's more about his credibility than
sure.
about the company's credibility.
No, I do. No, I think it's fair to say that having Elon back, posting on X more about Tesla,
Yeah,
and actually seeing some things happening, seeing some things make progress.
yeah,
And I think that was a big factor. I think that was a big factor in
right,
the, yeah, yeah,
right. I think it's a big factor because it's that when they do the business, the key man risk,
right, right.
founder, CEO, having that
Elon,
attention. It's
just
just
Elon.
Elon, just Elon. That they don't want to figure out the details of it. They just
Yeah,
say he's back,
yeah, yeah.
and then he'll make good things happen. So they don't want to like analyze this thing. It's like it's potentially huge. I'm not going to do the numbers. It's just Elon's back, and then execution will happen.
Right.
Um, so I'm sharing the screen again, and okay, so now we go to, oops. So this was something that Larry Goldberg made over a year ago, I think about a year ago, because it was probably updated in January 2024, because all the actuals of 2023. So that's some of the stuff I got from, and then I modified 2024, 25, 26 based upon the new lower price of the batteries
Sure.
as well as the other things. But basically, the volume got almost up to the 2025 level, but the revenue stayed at or below the 2024 number because of the big drop in battery costs.
Right.
Because we had high battery costs because uh, over demand, over ordering by various companies that didn't follow through, and then the COVID stuff still lingering supply chain, and then it all collapsed into a glut state. We went from shortage to glut, and then the prices just collapsed. Which
Yeah,
all
and I think anybody that's looking at it long term has to take into consideration all these chemistry changes too.
right,
When we were making predictions even a year ago, well, a year and a half ago, when you and I were trying to put the Elon Musk mission book, actually get it published November of 2022, we were even talking then about the fact that over the course of the next 5, 6 years, the price of lithium would come down, the price of batteries would come down. Therefore, the volumes that we might project in terms of dollars was going to be less, even if Elon hit his numbers in terms of the units that were sold.
right.
But now, all of a sudden, we've got a completely different thing happening with these chemistries coming out where, using nickel as the primary component is not necessarily the case, where using way less lithium might be the case, et cetera, et cetera. So we have all kinds of possibilities now that these price drops might not ever see increases again.
Right. One thing is that, this is the previous most detailed projection forward of the energy business for Tesla,
Right.
right? And as we see, it was off by 80% on the
Right.
2024 volume number,
Right.
right? And it was off by double on the price per gigawatt hour. No fault of Larry's.
Right.
It's just that the markets, the commodity prices, the volume numbers, but also when people say, like I got some stuff from Brad Ferguson, also a close watcher of the energy mega packs. He went out and actually counted some of them, although he skipped Q2 when he shouldn't have. The he was tracking the dollars per gigawatt hours and thinking, oh, that's dropping, and not saying, hey, volume's going to go crazy
Yeah.
when the dollars drop, because this is going to be way better than natural gas, the alternative energy solution, which is not changing,
Right.
right? So the volumes can go nuts because of this demand. So I've done a close analysis of master plan part 3, talking about getting to 10 terawatt hours and that kind of thing, and how we'd be adding that amount. China is past 1 terawatt hour of solar and wind. Basically
Right.
added 600 gigawatts of solar. It's growing 50% a year. They're gonna
Yeah.
get to like 750, 800 gigawatts of solar. So the thing is, what does that mean for megapacks? So what it means for megapacks is simple. How many a megawatt of test of solar needs about a 2-hour megapack, right? So because it's roughly 4 megawatt hours, right?
Mhm.
So if I have a megawatt and I'm going to store 4 hours of solar for a day,
Right.
which is what you can get in the United States, 4 hours of solar in a day,
Mhm.
then you get 1 megapack. So if you're assuming all 4-hour megapacks, then you could say that the if I get a terawatt hour, that's 1 million megapacks. So if I need to back up solar, but you can say like we won't do it for all solar, whatever situation, half of the solar, still 500,000 megapacks, which would be 50 megapack factories,
Yeah.
right? And
Yeah.
China isn't even all the installation of solar, and all the production, although it's the vast majority. So we're in the 50 to 100 megapack factory demand,
Yeah.
right?
Yeah.
Um,
And
I'll
that's
go back.
that's only for that application. And the number one application isn't even for solar and wind. The number one application is to make existing fossil fuel plants run better.
Right, right. So there is the TAM to get up to hundreds. I think in the master plan they talk about getting to 600 megapack
Right.
factories,
Right.
which wouldn't necessarily all be there. There could be China and other countries,
Sure. Sure.
but that plan did not include the impact of AI data centers.
Right.
AI data centers
Yes.
could double,
Yes.
triple,
Right.
10x that over the next 15 years. And the talking about adding 600 terawatt hours of energy by 2030 for the United States for new AI data centers.
Exactly.
So 600 terawatt hours, we're talking again about 2 million megapacks,
Yeah.
right? So you need 1 million, 2 million megapacks, you need 300 megapack factories. So when we say, okay, the demand and the building of factories could really start ripping, that's what I'm talking about. I want to talk about other segment valuation. Morgan Stanley does do a valuation where they say, how much is energy worth? They talk about energy being worth $36 per share at
Okay.
$130 billion, right? So
Okay.
they did have that, but
Okay.
they didn't change the number when it came in
I
over
see.
double, right? They said it's still the same thing, haven't changed our
Oh.
analysis.
Oh. Hmm.
So and then they have some stuff about robotics and stuff. So only one that does that kind of segmentation analysis, but then they chicken out and they don't say what the real number would be. They say only what might happen in the next 12 months or something like that. So they really cut back on what that valuation number is.
Hmm. Interesting.
So what is missed is that Tesla AI drives growth and profitability and also creates the opportunity. The Tesla AI in general is creating the opportunity for far more megapacks, tripling megapacks, quadrupling megapacks.
Right.
Megapack 3 and beyond will be able to directly connect to high power lines. So that will speed up the deployment and it gives an advantage to Tesla, the innovation of, can I just plop it in there, and I don't need a substation. I can start eliminating transformers. I can directly hook up an AI data center and minimally do any grid connection, because grid connection takes time. If I have to lay 1,000 miles of cable, it takes a bunch of time. Like how many, you know, approvals do I have to get county by county, state by state? There's a bunch of headache and process to that. And I mentioned because of this, how much solar and wind there is, hundreds of megapacks by 2030, megapack factories by 2030.
And this will work better everywhere. I mean, even their own charging stations. If you can go in there and just drop it in without having to worry about substations, whether corporations that want to put it in their factories or in their distribution centers, shopping malls, hospitals. I mean, all these different categories. If it doesn't require as much work to get it up and running, it's just going to make a massive difference.
Right. And based on this analysis of what must happen, like if we must have, 600 AI data centers in the United States or something, that by 2030, the missing thing is it's not just megapacks. They must build thousands and thousands of acres of solar.
Yes.
That has to happen because the existing power from a natural gas plant, from a coal plant, is already spoken for.
Right.
We've been at 4,000 terawatt hours in the United States. We're using all the power. There's a little bit of leeway. You can do some time shifting. There's a little bit of stuff you can change around on that. But in general, the power is spoken for.
Right.
There's 5% that you can play around with. We're talking going to 15%. There's no, the first 5%, you can really go efficient time shifting and look at that. But beyond that, you must start building new. And the fastest way to build new is with solar.
Right.
So you can build a lot more solar. And I'm expecting Tesla to come up with some kind of module dropping thing to make solar. Also some processes for installing it with low labor, because labor is about 2/3 of the cost of solar. So I'm expecting some low labor process, quick, drop and go.
Possibly something called Optimus.
Optimus on the construction side, but something on the module side has to happen too. They need to fix up something there. Yes, but Tesla bought. But the bigger application, not besides making solar for Tesla bought, is distributed AI inference. So the chip AI5. Currently, we have what was hardware 4, now called AI4 version 4, in the Tesla cars, which have about like perhaps 20 trillion operations per second. That can get 10 times better, up to like, actually, I think maybe about 200 ops per second, getting up to a petaflop operation range for that, or 200 based on the price. Sorry, 200, because it's 20 times cheaper. I have another slide on that, but it's I think that you can make money on that. I'll have that on the next slide. But before I go on here, the robotaxi trials, if they go 8.8 and they announce that with Baidu, WeRide, the 10 other near Waymo scale or larger than Waymo scale companies in China, if they say, okay, we each need like 5,000, 10,000 robotaxis for next year, the only ones they can get would be a Model 3 or Model Y, because they're the only cars that are ready. And if Tesla's going to make the new vehicle, maybe that's ready starting in Q1, but maybe not. In the meantime, Q4, Q3, they need to buy some Model 3s and Model Ys. And for reducing risk, just buy what's there. So then the production could really boost up. So these things are working together to make the business more profitable, which is what Meta is doing to make their Llama 3 AI profitable. So they're putting billions of dollars into Llama 3, their AI large language model chatbot. And then they put it onto the top of Instagram and Facebook, etc., to do some kind of like searching and querying and talking to keep people engaged.
Right.
So if they keep people engaged another 10% of the time, they make 10% more money on ads.
Right.
Right. Tesla's main business is cars and energy, and their interaction with AI is to selling more cars. So, we discussed before, is that Tesla's production at 400,000 to 450,000 is underproducing what the Shanghai and Texas and Berlin factories can do, they can go up to 700, even 900,000 per quarter in
Right.
2025. If there's particularly if there's huge demand from the from the FSD robotaxi.
Yeah, they actually, yeah, go ahead. I'm sorry.
And then FSD sales are as much profit as a car. So if I
Right.
sell FSD for $8,000, my car profit is $8,000. If I do a direct sale or if they subscribe to it monthly, the subscription means you get it over 4 years. You sell, but the analysts would treat it as it's happened. The
Right.
sale has happened. And so each FSD sale is much of the car. So then you can get more cars because people love the FSD and then straight FSD. So it's a double boost of selling that. So we can get 400,000 more cars next year per quarter. So going up to 1.6 million. And then if FSD sales go up to say half of all cars, let's be more conservative, a quarter of
Right.
all of it,
Right.
then that would be another million.
Right.
So it'd be the combination of like a 2.6 million. So it'd be like more than tripling the revenue that Tesla would have.
By the way, I'm hoping I read the headline right, but I know the headline exists. The headline is that Berlin's expansion was approved today. This is Wednesday, 4th of July.
Mhm.
I wasn't clear on whether that was the final thing that they needed, but it looked like it was.
Mhm.
Based on the headline. I didn't read the details, but it looks like that's pretty dang close to getting ready to be able to start, putting up the walls and starting to make cars.
Fantastic. So the Tesla AI 5, I'm expecting about $2,000 per chip, which is more than the version 4 chip, which is probably around 500 to $1,000. But and then also you normally need energy and infrastructure. So if I buy a $40,000 NVIDIA H200, they must make a data center to put it into. You have to pay for the energy to operate it. So generally it's roughly a triple,
So
rough
this
rule of
is
thumb.
so Brian, you may have lost me a little bit here. You're talking
Yeah.
about the ability of Tesla to sell inference that is going to be existing inside of our automobiles and inside these Optimus bots. Is that correct?
Right. Right.
Okay,
Inside the
right.
cars,
And inside the
it's
bots. Yeah.
inside the bots. They'll both be using AI 5 chips, then AI 6, AI 7,
Right.
but the chip will make money by answering questions and doing stuff
Right.
because you will be able to run your AI, your instead of GPT-4, or Grok 1.5, you'd be running Grok 4
Right.
off of this and it would run better. You get better answers because you have a more powerful device. It
Right.
would be like 20 times more powerful. It'd be next level in terms of the AI because it would be far more powerful than a laptop. Laptop at 20 teraflops, it'd be at least 10 times better than that. Um, and then based on revenue calculations from Jensen Huang for NVIDIA chip, I kind of scale it down. It could be making people Tesla $5,000 per year per chip, even when they give half the money to the owner, right? So, and then again, if you wanted, be more conservative about it, you can, shave it back. But it'd be profitable to buy and own, get your payback. If it's a $10,000 thing, the owner would make the money back in 2 years. Even with half of this, it'd be 4 years, perfectly
Right.
valid investment.
Right.
And then Tesla, if they can make 100 million of them, then it'd be huge money. So then it would take the pressure off of, I must figure out how to have it wash dishes, do my gardening, do the other manual work that people expect to it is the C3PO where I'm talking to it, or
Right.
or the Jarvis of Iron Man, where you're talking to it, you're getting really good answers. It's better AI for you.
Yeah.
Let's see. And oops, do it. I stop sharing that. But basically FSD going next level will help drive this. Let me just escape out of here. Stop this. And then, like I have projections of how the FSD and Tesla bot might roll out but it's though they're again even more speculative. But I think that the driving the sales with China deals, getting to more cities would be something large. And I'll try to come up with some contribution thing. But basically, the whole tripling the stock price, even beyond where we are now to 750 or 1,000, all that can come in if you have robotaxi um, deals and FSD fully working.
Yeah, not even counting Optimus.
Right. Right.
Our dojo as a service. So
Right.
plenty of opportunities out there. So the energy thing, as Elon has said, if I can summarize what I think I hear you saying, is that energy should equal or exceed automotive over the years, even as automotive increases. And if we're half off, and Tesla only does 10 million vehicles a year, and we only get to 500,000 gigawatts of energy storage per year, those would still be the largest companies in the world by
Right.
themselves.
Right.
And so together they would be double the largest company in the world. And then when you start adding in FSD, robotaxi, Optimus, possible use of the chips in these vehicles and in the Optimus bots as a inference cloud, if you will, to draw off of, that the numbers get to truly whack.
Right.
Quite a phrase.
And then I didn't even discuss it. If Tesla gets really good at not just hardware innovation on energy side, but software innovation on energy side, then the cap gets even higher. So if the world capacity is 100 megapacks in 5-6 years, Tesla megapack factories, Tesla makes 20 of those, and then that's 10 times more than Shanghai
Right.
and Lathrop. Then we're looking at like $100 billion, $200 billion of profit contribution.
Right.
Which would be $6 trillion, on a standalone basis, just for the energy side of things. Which is again, if it's bigger than the cars, and cars can go to several trillion, then this can also get there. And I think that we need to get more details from Tesla and the company as to describing the equivalent of FSD that they're working on the energy side.
Yeah, exactly. And also, of course, forgotten in all this is that Tesla is also setting itself up as an energy distribution company too.
Right.
Crazy stuff.
Yep. Okay. So we have other videos. So people can check out the previous ones we recorded and the new ones that are dropping. Like and subscribe. Follow Randy on his YouTube channel, Randy Kirk, and follow me as well. Talk to you next time.